Hi guys, welcome to Savvy Money Show. Me, your host Sean. Well, it's been a weird week, to say the least. And if you've been following me on Twitter, on Discord, you will know how busy I've been. If you've been following me on these platforms, you know I've been accumulating cash because my broker gives 5% interest on that. And I think the market has been too frothy and has been due a correction. We have started seeing a correction. Because of war in the Middle East, on top of Ukraine, you're seeing lots of people moving to oil. And if you remember, last week I spoke about Lockheed Martin. I said that because I saw that as the best value military stock, and that's had a parabolic run along with all military stocks. Now, I myself, I'm not a fan of war. I hope everyone is okay. I know some people say, well, someone's going to be in it, but I'm not someone who stays in war stocks for long. I will only trade them. Nah. Biden has gone to Congress to try and get 60 billion for Ukraine and 100 billion for Israel. That is more than they've spent on Ukraine in the past, and there's no reason why it won't get approved. That will be a big boost for these stocks. But when you look at the oil charts, you'll see it's like the beginning of 2020. So you want to be careful that you don't end up with oil dumping on you. There will be a huge run up and then a huge dump, like every commodity. How am I playing it? Stay tuned to see. Don't forget to hit the lovely like button and the sexy subscribe button, and don't forget the bell notification. You'll be notified when a new video gets uploaded. And the free links in the description below. You can pick up a free share worth up to £200. And check out our Discord. And if you want a more in-depth analysis of any stock or market conditions, then why not look at our upgraded membership program and support us. First one is my darling, SBSW. As I tell you, I sell when it's $11 a share, and I buy back when it comes down to 6 and below. Pays at 6.7% dividend. As I said, for a dividend stock, it has to be above a 5%, but I'm not buying it for the dividend. That is a bonus that I get while I wait. It's a hedge, has a PE of 5. It is also it's one of the biggest gold miners. It's in the top 10 gold miners in the world. It is also top 10 platinum miners in the world, and has put a huge amount of its profit into fast tracking a lithium mine. It's picked up. What I love about its model is it's almost Google-esque about it, in that it takes percentage of its profits and invests it in another area, which is where it came up with the catalytic converters and platinum, and recycling and the platinum mining, and then the lithium mine. Now you can see here it's a 3.8 billion versus 4 billion market cap to enterprise value. It says forward P of 38. I don't know where they're getting that figure, but for them to be a forward P of 38, I think it's going to be either a huge acquisition, or they're going to put huge investment on this lithium mine. Price to sales of 0.57, price to book 0.75. That means if they dissolved the company and all the assets were shared amongst the shareholders, there would be more money than available than has been invested. Now let's get on to the next one. ZIM, Integrated Shipping Services. And you may think I'm crazy, but as a P of 0.84, I would disregard that. That's the same with any kind of dividend it shows you, because that will not be relevant. So 1 billion market cap versus 4 billion enterprise value. Price to sales 0.14, price to book 0.22. The thing about this is, as I said, oil chart looks like 2020 and has free cash flow of 6.4 billion. Now, it has liabilities, yes, and a lot of that is because they hire out a lot of their ships. So the assets are kind of misleading. I spoke about this before when I broke down the company. So it has 5.8 billion in assets, liabilities. Total assets are 10.68 billion. So you cannot trust that, because they put the ships as assets on there, and they shouldn't be, as they only own between 10 to 20% of the ships they have on the record. If it was a true reflection, if that was their true assets and their true free cash flow, then it would be a negative EV company. So do not trust Yahoo Finance when it comes to the assets liability. That is not the reason why. The reason why is, if you remember 2020, oil price went shooting up and then it came crashing down, and the shipping prices throughout that went through the roof, and that is what ZIM makes its money on. I think this is a good steady company throughout. I think it's what they call, it's so bad it's good. What my friend Brad Own the Chaos says is so bad it's good company. So the fundamentals and the charts have just made it look good value. It's 45%. Come down 45% from where we were trading it before, and when we were trading it off the dividend, and we trade dividend run up, we got out before the drop, and thank God. The thing now is, if shipping rates go through the roof, you would hope that they would secure long-term shipping contracts. And it could be, if you remember, this went to $70 and $100 a share. And the dividend on this then would be over 100%. Something to keep in mind. We've seen a biotech sell-off because Beam have announced they are selling. Beam have announced they're laying off 20% of their workers and streamlining the company. Now, I mentioned at the beginning of the year, one thing I would like them to do is to streamline their company. And I believe this sell-off is panic selling from people who do not understand the science do not understand the companies. The likes of the hedge funds who were the same people who, when asked what Upstart did, started saying, oh, there's something wrong with my Wi-Fi, when they still had a good connection, because they couldn't answer the question. Now, I have bought a massive amount of Beam at these levels. I was regretting selling it last year and earlier in the year, and I was happy to have another opportunity to buy it back, because I think it's an amazing company. I think they're doing the right thing, securing their cash so that they have enough money to go through to 2026. And they are going to be like a mini ETF for genetic companies. I have also bought Schrödinger, another company that I sold when it got to $55. Well, I sold around 51, 52. I didn't quite get 55. But I'm buying back again. Now, the thing is, they have sales, which I like in biotech company. They have a PE 27. It's rare in a biotech company to have this. Their market cap is above their enterprise value, but that's fine. The price to sales is 8.48. Price to book is 2.65. They have 547 million in cash and only burn about 25 million per quarter. So unless their sales get hit, I think that they will be fine. They're trading at 1.2 billion above cash. So that is good for me. Relay, I was sold when it was a sector dial-in. They use AI to do drug discovery, and they have a massive amount of patience. About, if they have successful data, there will be about 85,000, I think it is, but no one cares about data anymore, as according to yesterday, all biotechs going bankrupt. Now, it's a risky one because they had weak data in the second PI3K indication. If they improve that data, it can go anywhere. They trade below cash with 872 million in cash, and they're burning 150 million every 6 months. That's a good cash position to be in. But they need to do like Beam and start cutting costs. Now, we spoke about Beam briefly, and the thing is, they have some exciting, for those of you that didn't know, early at the beginning of the year I said it's load the boat time at around 15. Have exciting technology around base editing, but they're incredibly slow getting information out and about doing anything. It's been 3 years, they've only just started a clinic, and the fact is, if you thought it's cheap, it's still like 770 million above cash. They have $1 billion in cash. They burn 85 million a quarter. So that is why they want to streamline it. But this panicked the market. They're promising animal data for a few programs, but they need to move that to human data. Otherwise, they will be stuck behind. People are getting tired of waiting for it. And Verve is basically a mini Beam because they've got the same technology in cardiovascular, and Beam get a huge chunk of any revenues So a lot of people are thinking, why own Verve, just own Beam? That's what I did when Verve had the run up. I sold Verve and I put the money into Beam before Beam ran up on the back of it. And now that Verve has dropped back down, I'm picking up a tiny position in Verve. Sorry. Now, Intelia, I like Intelia. Some people thinking where it's working with first generation CRISPR, it won't amount to much as it has an expiration date, which is fine if you're in it for a short-term investment. Now, they have free trial going on, but I think the HIE trial which is a rare disease and have very few options, will be good. They have £900 million in cash and burn a whopping £125 million per quarter. Now, they need to get control of the spend. It is ridiculous. But I also bought CRISPR. I've been buying CRISPR up left, right and centre. We're waiting on the FDA approval, which we all heard the decision should come by December. We're nearly there, and started out amazing with a cure for sickle cell disease, and they kind of stopped. It's almost like nothing has been happening. A company that had this much momentum around them, you would think they would be churning out the PR to get people buying. Now, I'm surprised none of these have had any takeover offers on the dips. Now, I think they will get approved without any issues. I sold when it hit $71 a share, keeping a few free shares. And when it came below 50, I used the profit to buy back in. Now it's below 40. I'm putting all my original investment back in. And if it gets 35, I'm adding even more. If you're not aware, DNA, I have a trading mentality with this one because it's not a high conviction of mine. It's what I call a medium conviction. I like it, but then I hate the cash burn and I hate the stock-based compensation of it, and the fact that the CEO is the highest paid CEO when I don't think he's done enough to justify it. The company overall I like, though, and what they're doing. Every day recently a new partnership is coming out, and I want to know when these partnerships are going to come into money. And we kept hearing how these revenues would grow to $1 billion, but right now I just want to see them become profitable or be close to profitable. Now, when COVID ended, most of their biosecurity revenues went away, but now they can't use that excuse anymore because they're making all these partnerships. And they have about 1.1 billion in cash and burn about 165 million per 6 months. It's a lot of cash burn for no growth in revenues. And I understand it takes time to get these programs from start to commercial, but a lot of investors are tired of waiting for it with no year-over-year growth. It comes when you have like 3.3 billion market cap with $1 billion in cash and 300 million in annual sales, it's about 10 times sales. Now, I would have thought this would have grown once certain other companies in the same sector had got that went SPAC at the same time, like me, and went to the wayside, and I had to change their whole mentality and change the way they work. But and I thought that originally that was why I was having a hard time bringing in the revenue, because of so much competition. Now they don't have as much competition, which is why they're making all the partnerships. But I'm still buying when it's below 170, which it is now, and I'm selling when it's above 2, keeping 3 shares as my profit. And the last 2, Caribou, they focused on allogeneic, I might have butchered that, cell therapies using healthy donor cells. Lead program has best-in-class data for efficiency in CD19 and with a PD1 knockout. If the data proves to be good, that it could be really big for them. Have about 300 million in cash and burn about 30 million per quarter. Enough cash to get them through for more key data. They have 380 million market cap, which puts them close to cash already. I do like this company, and it's about $3 in cash per share. This company has never been as loved as other companies, so I think if they get good data, they could do well. And another one that's like that is IPSC, which this is one which I was buying before, which I no longer am, purely because their management. They are below cash, but the management is what's preventing me. Until the management come up and tell me something, I will not be buying something. But the last one that I'm buying is Sana biotech. I sold during the run up, and basically I thought it got too rich for what it was doing, and now it's come back down. I do like the company, but now it's come back down. It's given me another opportunity to buy. I'm sorry I'm running out of time, but it's come below my original investment price, so I'm putting in my profit and my original investment into it. And please hit the like button, comment in the box below, let me know what you're buying, let me know the reasons why, let me know if you're not buying and why, and I'll see you in the next video. By the way, I wanted to say, if you are into biotech, genetic companies, then on Twitter there are a couple of people you should follow. Biotech2K1 is always on the ball. Gene Investing, he's also on the ball. DNA. Now Gallum also, it's good, but don't forget to hit the like and subscribe on here, if you and it'll convince me to do more videos. If you found any of my videos helpful and you want to help me make more, you can support me by buying me a coffee. The link is in the description below.